And good afternoon. This is the Elliott Wave weekly update for gold, silver, and platinum being recorded on Saturday, July the 19th at 1 p.m. Pacific Daylight Time. First, my apologies for not including an update last week. I do have some other things that I'm attempting to deal with, and sometimes they get in the way. And you may hear my voice come and go as I try to get this update completed, and that's one of the factors. So let's get started here. Thankfully, to the markets, uh, all of them continue to basically, platinum continued to move higher. So we're not really seeing any major changes to our counts right now. Particularly in gold, it continues to consolidate. Silver actually moved to a new high, but then continues to consolidate. And all of them continue to have uh, larger gains yet still to come. And that's kind of interesting. So I want to start here with gold. And I want to put a little bit of background into what I think could be happening into gold and why gold seems to be just sitting and not necessarily making any stronger moves back up again, since that's pretty much remains a part of everyone that I've seen in our long-term forecast that we're looking for gold to break 4,000. We're looking for gold, some to break 5,000. And so I think those remain in place. And here's part of the reason why. That you've heard me speak often about when we're getting a larger move in the US dollar, particularly when the dollar starts to decline, gold has a tendency to rally. Gold also has a tendency to rally when there's uncertainty around the globe. When we're starting to get war uncertainty, gold tends to pick up a lot of bullishness in the market. When the markets, when we're fighting inflation, deflation type deals, when the economies are kind of starting to crumble or crack, we tend to get movement in the precious metals. So we continue to see central banks buying gold. And that whole process pretty much started back in 2022 when Russia invaded the Ukraine and started that war. That's what started getting the ball rolling. But more so now, with the current administration firmly in place, one of the very, very first things that they started to do was put tariffs on everybody, every country, and just setting a deadline and then coming up with these, well, this is how much we're going to pay. This is what you're going to have to pay to import, export, et cetera, all that stuff. And to really, what started to happen, and the best way I can put it is that it's brought on and possibly started by China, but other foreign central banks began to weaponize the US dollar. But not that it was the US dollar weaponizing itself, its own currency against the globe. It was the globe weaponizing the US dollar against the United States. Now, what you need to remember, and even if you don't know, you need to understand that as of today, so July the 19th, 2025, the US dollar remains the international currency, reserve currency for trade. So while it's a very long and arduous process to try to dethrone the US dollar from being the international currency, reserve currency of trade, I believe it's underfoot. And the reason that it's gaining more momentum right now is because of these trade wars and the continuation of these trade wars and tariff process that basically is affecting every single country on our globe that does trade with the United States. Now, I believe that the current administration thinks this is all good news for us because we're going to get all this stuff and let's go make it in America. But to think, to have that thought maybe 50 or 60 or 70 years ago, yeah, okay, we had the time, the effort, and the money to have all those plants here. But then as things started to get a little out of control in the United States, a lot of that moved. It was cheaper to build. It was cheaper to import from a different country and then export back out product. So that all now is being upset because we either got to make it in America or we're going to tariff everything that we have to bring in. So if you want to send your cars over here, you want to send your chips over here, you want to send your computers over here, et cetera, well, you're going to have a tariff on all that. And so starts the trade war. As we have seen previously, and one of the big subjects of the current administration, or just the big targets of the current administration, has been China. And now it's been expanded. So it's China, it's the European Union, it's Europe, European Union, and Canada and Mexico. Now, those trade agreements have been put together and carried, particularly with the North American Trade Agreement. That was put together by, I believe it was President Clinton. So it's been in for at least 25 years or more. It's been in place and it's been very functional. And it's how we trade between Canada and the US and Mexico, Mexico and Canada, and vice versa. And I think it's been a very productive, that's just my opinion. But that came to a big quick close when we slapped tariffs on Mexico. We slapped tariffs on Canada, demanding that they stop the fentanyl coming into the country. Now, that's all a good reason. But to me, it's like, you know what? The fentanyl is going to continue to come into the United States. It's not that the Mexican government or the Canadian government need to stop it. It's not coming from, it's not being, yeah, whatever. But this is not really sufficient in my view. But here we have it. Now we've got this trade war. And Canada and the Canadian government have made it very clear they're not going to play. They're not going to play. They see all this coming. If you notice, there was a big change in the G7 meeting most recently held in Vancouver or in British Columbia that did not necessarily go real well. And so, in terms of the US participation, um, these things continue to really isolate, in my view, the United States. So the weaponization of the US dollar, basically to me, I feel it's against the United States, is that dethroning the dollar as the world reserve currency of trade. So when that takes place, then China, Russia, Canada, Mexico, all Japan, they don't need to hold the dollar in reserve to trade. China's been attempting to do this for a while. They would love to see the US dollar be dethroned as the reserve currency of trade. They're getting closer. And so, but in that process, what we're seeing is that amongst those buyers of gold, when they see it decoupled from the dollar, the price of gold skyrockets. And we've seen some very, very strong buying being done by the Chinese central bank. And they continue. They back off, but they come back and they back off and they come back. And they are building up their gold purchases strongly since 2022. Um, but yeah, and there's a lot of reasons that go behind that. You can go look up at the history and the history of how the West at the time, which was the European Union and the United States, along with other partners, um, froze Russia's foreign exchange reserves. It's the US dollar and the euro. Froze them. Whatever assets Russia had in dollars and euros held in in the United States and within the European Union, froze them. They had no longer had the ability to go and get that. Well, that didn't sit real well. So these things really started to accelerate and really started to pick up some steam. And so far, we've seen where the not only necessarily just gold, but we're also seeing a big uptick in purchasing of platinum and the byproducts of platinum that go into manufacturing. So when we get to looking at who are the major buyers of platinum, we know the major buyers of gold, Russia, China, uh, the US is picking up some. And we got the major players that are out there scooping up gold. Gold remains above, well, actually, it's not even really slipped below 3,200, maybe a little bit, but it's been consolidating and it continues to consolidate. And so let me jump into here and I'm going to start to pull back some of this other stuff that still uh, affects how we're trading. Because when we're just taking a look, it's like in 2023, um, China was the single largest gold buyer among central banks. And they supposedly, the amount they've added to their reserves was 225 metric tons. 225 metric tons. Now, the other thing to remember, this gold is in limited supply. It takes a long time for the earth to produce and make gold. And then it takes a lot to get it up out of the ground and refine it to where you're putting it in to these, 0.99, whatever the percentages of gold. And so when that market starts to get a little bit like there's not that much available, well, guess what? The price is, you got a short squeeze, right? So to speak. So, so in 2023, it, or actually in 2022, it was 225 metric tons of gold. That was in 2023. And then in 2024, they slowed down. So 2025, they are picking up again. And that's what pushed it up to about, I think it was 3,500. And now it's just kind of relaxing a little bit on that. So with this weaponization, it's much deeper and it's much more complex than what I'm stating. But understand that as this dollar gets sold, gold gets purchased. It dethrones the dollar from that reserve status. That has been, I feel, a primary goal of the People's Republic of China to dethrone the US, to come out the victor, to be able to really have more control than what they already have. The largest holder of US debt remains China. We already know that they've come in and they've been selling the debt. The continuation of the dollar being sold puts a lot of pressure on interest rates. Because if we're looking at that, the bonds are being sold. The 30-year bond, the 10-year note, they're being sold. And then that money's being converted back out. They don't want the dollars. So they're coming in and selling it. They have to take dollars in and then they sell the dollars. So this is a vicious cycle. And I don't think it's going to end well for the United States. You have to be determined. Back to gold. I'm not really changing anything I have here on the large picture. So I'm leaving this as cycle one, cycle two, cycle three. But boy, even under this cycle three, there is a ton of upside room left to do. Because what's in cycle three is going to be 5 waves of primary degree, of which we have 1, 2, and then of 1, 2 done. And then on the intermediate degree, there's going to be within primary three, on intermediate degree is going to be 5 waves of intermediate degree, which we have 1 and 2. So you can see, you can just keep going to see how far this subdivides. Now, I could try to lower these, say, for example, that this is primary one, primary two, and we're in primary wave three, which just drops it, but that's not really going to make any difference to how far up we're going to be. So again, this is my maximum monthly chart. And right now, I think that we are still within this cycle wave three going up, and we're in primary wave three going up, and we're in intermediate wave three going up, we're in minor wave three going up, and we're in minute wave three going up. Now that I can bring it down, and let's take a look at the weekly. There you have it. There's 1, 2 in the minor, 1, 2 in the minute, and now we can see what's going on inside. So we got this really great rally, but it was in minute wave 3 of minor wave 3. So right now we're in a 3 of 3 of 3 move. Minute 3, minor 3, intermediate 3, primary 3. So actually 4 of them. A 3 of 3 of 3 of 3 move. And actually it's 5 because you can go out to that cycle degree. That's a gigantic rally. That's a gigantic rally. And we're sitting maybe, maybe midway, midway up. So there's still so much more to come. So right now we have since actually mid-April, we've been consolidating. And I thought we might break out again here, which would have been mid-June, but we're still consolidating. So on this chart, minute wave 3, where are we? Well, I think we're in minuet wave 5 of this minute 3. So we're getting ready. And I have a level up here at 3680, almost 3700, which may complete minute wave 3. So now let's break it down. So within that, we are in minuet wave 5, and in that we have 1, 2, 3. I'm looking for sub minuet wave 4 to come in and complete. And again, this is a 5-year weekly chart. Let's bring it down to the 3-year, and now we're looking inside this. Though we've been consolidating for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. 13 weeks, we've kind of been stuck with 3135 on the bottom and 3,500 on the top. We're kind of just stuck and playing really well between like 32 and 35, 34. And so I think if I had to read this correctly, I've got A, B, and I got 1, 2. We're going to come down probably a little bit more severe right now. Maybe have a couple of days of down 50 to $100 in gold. And we stand a very high chance of getting down to below 3,100. Now, a lot of people believe they're going to get shook up down there because, oh my God, I'm really losing money because you bought in late. But I don't think that the market's going to turn and go totally sour here. I just do not see that happening because we have too much left to do to the upside, and there's too many factors still in play that support higher gold. So we have conflicts. We have geopolitical conflicts in the Middle East, still flaming the fire, right? Has there been a resolution with Iran? Has there been any resolution? Has there been any further news? It's all quiet on that front since we supposedly obliterated their nuclear facilities. There's no proof of that. But the United States is not ever going to admit that that didn't happen. So, or the retribution. Yeah, we got the back and forth, the missiles and all the rest of that. But truly, what is still left to come? So again, gold is on edge. The weaponization of the dollar still continuing. The accumulation of gold by central banks still continuing. The rallies in the subsequent precious metals, i.e., silver and platinum, still continuing. So I have no reason to believe that we're going to be dropping out of the sky here, although I do see some shifting of positions. Now, something else I've also noticed is GLD, which is the ETF for gold, has options. They're picking up a lot of steam in terms of trading, I should say. So when we get into these larger expiration cycles, well, they're affecting the price of gold, silver, and platinum because their options are trading much more frequently and with higher vol. And so that makes it great for options market makers, for dealers, and for traders to come in and put on trades that do get into a pattern that they get pinned. So it's whatever strike the market feels it's going to shift to, go to, flatten a position, monetize a position. So as we come into these larger monthly expirations, we see an uptick in activity within gold, silver, and platinum. But I don't see the market falling apart and declaring that that's the high of the high of the high. I don't see that. My count doesn't see that. So I think we're just coming in a sub minuet wave four. Once that's in, we get a sub minuet wave five up to put in that form, to put in the minuet wave five, and to put in the minute wave three. Now, where do we have it? We got a nice little band right there. 36.65, 38.24 up to above, just above 4,000. These are all real. These are all very strong possibilities. These are on the primary degree. I just think they provide resistance, if anything, without necessarily stopping the market, because I don't think we're going to be finishing anything up on the primary degree just yet. So I think that over time, we have still strong, strong potential to get well above 4,000. Now, is that going to happen in 2026? Probably not. Excuse me, 2025. Probably not. 2026? Yeah, very likely. And maybe a lot of it actually jumps into activity. Um, if we really do get into a period of inflation because of all the tariffs, because of the trade wars, if that happens and the US dollar really starts hitting the skids, this thing will just go through the roof. So I still see a lot of really decent trading to the upside. So I don't recommend trades, folks, but I could tell you, being long gold has not been anything but a good position and protection against uh, periods of deflation. Gold remains a storehouse of value. And I can go into a conversation on that, but let's move on to the next market. So in gold, still have a bullish outlook. I think downside, I think we could get back to about 3,087-ish. We also have 3,033. That would be on the daily. That's the daily 200. Should provide some very strong support. Right now, we're again still holding above the 78. That's a 78 period moving average. That's what the algorithms are using these days until I hear differently. And that's at 32.64. And right now that's holding. But I think if we break that, we might get a little bit of a surge that brings us down. But I think we have plenty of support coming in that we might get it down $100 today. But everybody looking at gold go like, whoa, look at gold. And yeah, it is a lot. It's a big move. And if you're a day trader, really big move. So I think that all stays in play, but I've got my eye on this down to here as where I think we can finish up this sub-minuet fourth wave and then start to rally again. And then I'm looking, first of all, for it to get above 3650 up to about 30, almost 3700. I have 3824 resistance, and then I'm up to 4000. Okay, so, and you can see on a daily, market's neutral in terms of being overbought, oversold. It's neither. It's neutral. It's sideways. All right, let's go take a look at the silver market, which continues also to be pretty dynamic. Let me go out here to my maximum and come on, give it, give it. All right, let me do it this way. No, there you go. That's what I wanted. So here we have, this is the 1980 high. So this data that I have goes back to 1970. So this is 1980. This is 2011. And so we're finishing up. So this was A, B, C, a W. And then we put in an X wave. And this is a Y wave. And then I think we have another X wave. And then we have a nice big Z wave. So we got a lot left to do. Now it could be just WXY. And then it starts over again. And likely would be a correction, but I'd be looking for an ABC down. And so, but now we're still within this Y wave. Now, how does that all figure in? Well, we are in what's going to be inside the I on into in the Y wave. On an intermediate degree, it's going to be an ABC, and we've got A and B done, and we're in wave C. And so within wave C, where are we? As best I can tell, I'm going to bring this down. I'm going to put it on my 5 hour, 5 week, 5 year weekly chart. Whew. And there we have minor degree. And this I lifted up. It was minute. Now I'm putting it up to minor because it's the C wave. What's going to be inside that intermediate C wave? 5 waves of minor degree. And I believe it is forming a diagonal, that the C wave is forming a diagonal. So here we have 1, 2, 3, 4, and we're in that fifth wave. Now, again, more times than not, within the precious metals, it is the fifth wave that extends, that creates a lot of wow fireworks, let's say. And this particular fifth wave took its time to get itself going. I'm going to bring it down one more time to the 3 year weekly. And here again, we have 1, 2, 3, and 4. And now we're inside minor wave 5 going up, of which we still are trying to work our way through and complete minute wave 3. Funny how that all comes up often. So in that, we're getting really great rallies in silver. And now it is tending to hold itself pretty much above. It dipped below, but it pretty much is holding above 38. And that's pretty strong for silver against a lot of these upside targets. Now you see nothing but a big, huge cluster of resistance sitting above us. And you can take it up to that level because we're looking for that minor fifth wave. I think we have a lot of potential to go above 44.59. So let's look here. This is the minute degree, but that's just the third. So we've already been past the 100%, which is 38. That we've already been up to above 39. So, and minute wave 3 is not done yet. So it really takes us up to this next level. And guess what, folks? That level is at 42, 41.87 to 42. Nice. Still got some rally potential. Now we break that down. Come in here to the daily. Now we can take a look. There's 1 and 2. Here's 1, 2, 3, 4. Minuet degree within the minute third wave. So where are we here? Well, we're in minuet wave 5 of that minute third wave. So here's the powerhouse. And look what we have. We had a powerhouse. Ran up to 39.53 or 50, let's call it. And within that, it's 1, 2, 3, and now we're back in a 4. So we have another fifth wave. So where can this guy come in? 39.525, we've already been past it. 40, 23 or 24 to 41.40. Now we up here to 41.90 for the third. See how we can get up there? We have nothing but resistance, and they can exceed these levels on the way to this level and build in that fifth wave. So when we're done with this sub-minuet fifth wave, that'll complete that, the minuet fifth wave, and the minute third. Doesn't necessarily have to come up here, but that's a kind of a top level for me. We get close to that 42. That's only minute wave 3. Then we get a 4. At 4 would be expected to come back to here. So wherever we are, we got a $6 drop, and it should be an ABC down. And this should also be A, B, and then we get a C, and that puts in minor 5. Remember, diagonal. And right now we're already kind of breaking above that top. So we can extend that. And put my rate extension back on. And you can see, ding, 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 right there, 41. So we can go up above it, come back below it, and then go back again above it and finish this whole thing. So silver still looking pretty good for the upside, and it seems to hold itself above 37, right? 37, 35, to be honest with you. Now, once I think we get up here and we put in this high, then we're going to have a little bit larger. we're going to have, maybe a $6 correction, bringing us back down to 36. Well, here, yep, 35. So it's going to be a bigger correction. And it's not just it's going to seem like it could happen all at once, but I think it's going to we're going to have a more consolidative period again. So that's silver. And silver, I think I've not really read up any news as to why people are jumping on silver, other than it's like the cheap cousin to gold. And if gold's going to really continue to rally and be a storehouse of value, a lot of that will shift and go into higher grades of silver. And so silver has continued to be more, you know, have more use within a lot of manufacturing. All right, particularly in jewelry. All right, let's go over and take a look. And again, we're kind of playing around here. This is on my daily. We're not overbought. Every time we get overbought, we pull back a little bit. But I think we can get very overbought and then pull back much more. Now, let's go over and take a look at platinum. Boy, platinum has just been wild. And what happened was it extended. I had that minor three here and thought, okay, that's all you got. Then they just kind of went up, and you can see it's a diagonal in and of itself. 1, 2, 3, 4, 5. So diagonal fifth fits perfectly. Put the three back up there. Let's see what happens. Here are the markers for a pullback. Looks like we started one. We got up to 1,504. Now, where can we go, Michael? Well, let me pull this back out. Let's look at our maximum here. We have 1666, we have 1935, we have 2154. Now, this as well, primary 5, primary A, we're in a primary B wave up, and the flat would come in at 2308. So I think 1935, yeah, 1641, not when that's only a 3. If we come down in a 4, then yeah, maybe somewhere up in here we finish this C wave. But again, we get into these fifth waves, we get into these markets where they just buy it. Now, this is something, if you watch the seasonality, it's not seasonally that it goes up in this time of the year. So I've gone over and I'm looking at that. Who are the largest buyers of platinum? Well, again, number one is China. They're the overall consumer of platinum, the largest consumer of platinum worldwide. And it's driven by industrial use and the jewelry demand. And, and also China is a significant importer of unwrought or powdered platinum. And so in 2023, which is the latest reportable year, they imported $2.86 billion worth. The US is also a leading importer. We import unwrought or powdered platinum. And so the US, we did 6.1 billion. Now that's going way back, so I don't have updated numbers on that. European Union, another major importer of platinum. And so for semi-manufactured forms, Germany leads that. China, Japan's in there, the United Kingdom's in there. And so we continue to see the platinum is gaining. Now, platinum is an important product used in the building of electric vehicles. So we're seeing that more countries, i.e. China, really moving in and looking to push Tesla out of first place with their own electric vehicles and the luxury version of their electric vehicles. And so I think that the tariffs against the country are going to prevent them from getting over here, but we don't know. We'll see. Now, also that from what I have read, again, I've not talked with any of the central banks. I don't have that gift where I can get in there. So what I'm realizing is that China is also buying platinum to store, buying platinum as a precious metal and putting it in, keeping it next to gold. So that's happening as well. So what we can say about platinum, um, what we're looking at is that I think we got the three. Let me bring this back down. Let's bring this back down, put it on the daily. We've got minor three complete. We're going to come down in an ABC. We have 3A2, which is pretty normal for a third, and that's 12,095. So we're going to maybe drop back to 1,300. That would seem there's the previous fourth, looking all pretty good, getting into this zone right in here for a fourth. But an ABC is going to be important to bear in mind. We need to see an ABC. This is a daily. I can break it down, look at the hourly, etc., to get if we can get those in. Once it is in place, then we're going to rally again. That's a 4, then a 5. Then we're looking for the completion of this intermediate C wave going up. And there we're looking up into here. We'll refine that as it starts to progress. But right now, believing that the market maybe have finished wave 3, if not, then we're going to go up again. And we'd have to go figure out where our resistance is going to be, and it'd be a little bit difficult. But I'd be looking at like 1,500 and 1,540, 1,550, etc., as these large numbers going up. All right, that is going to be it for right now. And here's another product that I really would make a stronger case in. If the interest was there, I could start producing dailies. We'll see. All right. But in any case, the next update will be next week.